right, everybody, let's go over a few charts and take a look at some of these things ahead of CPI. Today is Wednesday, the 10th of July. It is roughly 11 a.m. in the morning. So first things first, Bitcoin has been trading, sideways. There's a lot of FUD out there with Mt. Gox and all their billions of Bitcoin that's going to be sold on the open market. And the German government is also selling a lot of Bitcoin. So it's causing a lot of downward price action on Bitcoin. However, we are at an area where, generally people will start to look to become buyers just based on the fact that we are below the 200 exponential and the 200 simple moving averages on the daily time frame. It has been a little bit of a struggle, but me and my team are trading the ranges down here, but we are ultimately trying to get a good bullish entry, looking for Bitcoin to trade back up into the range. As if you remember, I said many weeks ago on the last time I downloaded a video that we were looking for Bitcoin to potentially take out this low and then trade back up into the range. So far, that is what is happening right now. As far as near term, let me just bear with me for a moment. Let me pull up a couple more pictures. But first, we can talk about this chart. I know this chart's been flowing around Twitter lately. This is a Wyckoff accumulation formation. It's exactly the opposite of a Wyckoff distribution formation. And you can see here that some people are assuming that we have done the swing, which is just a simple liquidation. That's basically what we've done. We took out May's low, and now we want to see a spring back into the range. That's literally what I was talking about in the last couple videos. This chart right here shows you the traders active in the past 30 days are down. That's this blue line here. The middle part right through here is the zero line, if you will. And basically all this chart is showing you is generally when we get in this area, we do tend to see price trade back to the upside. Here is one of those such instances where you got that. And then here's another one where Bitcoin traded up. But it doesn't always work, because here's one and Bitcoin traded down to sideways for many weeks. This is a weekly chart. So for many weeks, Bitcoin traded down and sideways until it essentially went up. Here, let me erase this. You can see the blue just comes under the light blue area there. Right in here, we did get a nice spike up. So Bitcoin is showing us on, a few different charts that we are potentially looking for Bitcoin to recover. Now, there is this chart going around Twitter, the SOM rule. It's a highly accurate recession indicator. Basically, every recession that has ever happened, this thing has gotten a spike. But one thing I want you to pay attention to, as there are some people saying that because we are around the 43 area above zero, that we are currently in a recession. That is not true, because yes, it has been accurate in predicting all recessions since the 1970s. One thing it has also been very good at is not predicting recessions. As you can see, there's a spike there that never had a recession. Spike there, we never got a recession. There, you get my point. There's many little spikes in this chart where recessions did not occur. All right, so just keep that in mind as well going forward. When Bitcoin had broken down through this area, a lot of people were assuming that Bitcoin was going to come down and retest this price action in here and maybe even liquidate that low. The reason why we were looking to buy Bitcoin is we knew that there were more liquidations occurring up at the higher prices. And you can see here, this bright yellow area is literally standing sell orders, stop losses. So basically, these are all people that are short and their stop losses are setting above price. I'm not exactly sure what time frame this is set on. It is not a 12-hour, even though it indicates that, there's 12-hour up there. This is not 12-hour candles. But we were looking for price to go back up to the 59K area for these liquidations. And we literally got that last night. All right, last night during the Asian session, Bitcoin traded up and did those liquidations. Now what we are currently looking for are, you can see here, these are more liquidations. higher up around 59,850. And if you look at the liquidations, or as far as the standing limit buy orders down in here, there is not as many as up in this area right here. You can see this is a very bright area, yellow, which screams a lot of liquidity. We've already liquidated the brightest area towards the downside. So there is a potential that price could go up, even though it doesn't really look like it. If you look at the 4-hour chart, that's an 8-hour, apologies. We look at the 4-hour chart here, you can see that we do have what appears to be a pretty bearish formation going on, as we did get this breakout candle above this resistance and above that resistance, and then immediately followed by 2 bearish candles taking out the low. That generally indicates that this right here could be a trap. However, we got CPI data tomorrow, and what are we thinking? Well, according to the economic chart, as of right now, CPI is expected to come in. This is the headline number. Remember, this is the number that also uses the volatile food and energy sectors. They got the forecast setting at 3.1%. That is 0.2% lower than we got last month. Last month came in good. It was a beat. This month, you need to come in at 3.1 or lower to get a beat. Do I expect that to happen? Well, unless they're looking at things that I am not looking at, I don't think you're going to see that, simply because of oil. If we go over here and look at the oil chart, you can see that oil on the monthly had a very big move to the upside last month, making a bullish engulfing candle. You did not close above May's open, but you did take out May's high and you took out May's low, and you closed up on the highs of June. So if you go from the open, not the low, but the open of June up to the close, that is roughly a $5 move. And then we should see that added into the CPI. So I'm assuming we're going to come in at 3.1 or 3.2. And if we do come in at 3.2, that will be a miss. And we could potentially see the S&P 500 roll over, or at least pull back. Here is the S&P 500 and the expected range. Upper edge of the expected move for this week is going to be 56.3320. Lower edge of the expected move is going to be 55.01 spot 20. And you can see that we're just a little bit above unchanged. The blue line is the unchanged area. That's the close of Friday's candle. As of right now, we do see a bit of hedging activity coming through here, and it could be based on the fact that oil did go higher. Now, that is my opinion. That does not mean that CPI will go up based on oil. It's just my opinion. It's the thing that I've been watching for the last several years, and it has been doing okay for me. But you can see, if you look at the put to call ratio, you can see that there is a significant more amount of puts being traded. Now, as far as are they buying puts or selling puts, the answer is it's a mix, right? There's 114,000 puts being sold and 114,000 puts being bought. The problem is there's 226,000 puts that we don't know what's going on, right? We don't know if those are bought or sold. So literally, when we have something like this, we just have to say, yo, they are trading a lot more puts today than they are calls, which generally, unless they're selling a lot of puts, which we don't see generally whenever this is going on, it does look like they are trying to position themselves a little bit more bearish than bullish. Right here is GE. You can see that there's a descending trend line right here that's basically halting price. If we pull up the Bollinger Band, you're going to see that the Bollinger Band is tightening a little bit here, but the squeeze indicator shows that, it was squeezing a little bit better right in through here, but we ultimately did get a nice little pickup here. So is it too late? No, not really. If I was going to buy GE, I would probably want to buy it around 158 and catch the move to the upside. But if it breaks out, I'll let you be the judge of whether or not you want to look to be the buyer on that or not. And we get the Bollinger Bands. You can see how the Bollinger Bands are in fact squeezing right now. So we have the lowest support right here. And currently we did close below it yesterday, and we are trading below it today. If this is a trap, you could see an outsized move back to the upside, but CAT can also be trading along with the home builders. I mean, Caterpillar is an equipment company, and you usually see equipment on construction sites and whatnot. So if home builders are going down, sometimes that can affect the price of CAT. But, if it's not tied to the price of home builders, then maybe, just maybe, this is a bear trap here and you're getting ready to see a move back to the upside. So I would at the very least keep CAT on the watch list for the next couple of days. And if you do see price shoot back up above that support level that I have at 326.36, then you could look for a retest of that area and look to get long on Caterpillar. The ones that we are currently in here, if I can bring this over and show you. So right now I just put on a short call just in case for tomorrow. And then uranium URA, this is one that I called out 2 or 3 days ago. This VIX trade right here is nothing more than a hedge. That means if price does in fact crash, then I will be situated for that. And then I have this XLF call on, but it hasn't went anywhere. So I'm probably going to close it out. But you can see P&L year to date is up to 981 as of right now. So, I mean, on a $5,000 account, that's close to 20%. So we are beating the S&P 500 again, and we will destroy the S&P 500 again like we did last year. And we do every year. And that is a real live account. It's a small account, but $5,000, it doesn't matter. If you can make money with $500, $5 million, it doesn't matter, right? If you can make money consistently year over year, then you're going to be just fine if you want to become a trader. Thank you guys so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.